Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 7th, 2025, we're putting Meta Platforms, ticker symbol Meta, under the microscope. We'll be breaking down the latest news, connecting it to the price action, and pinpointing critical levels you need to watch on the charts. First, let's look at the headlines that are shaping Meta's narrative and setting the stage for recent price movements. Just recently, Meta Platforms announced stellar Q2 2025 earnings, shocking the world with sales growing an impressive 22% to $47.5 billion. Crucially, the earnings per share hit $7.14, a substantial beat of forecasts by over 22%, signaling strong operational efficiency. This exceptional financial performance has led prominent analysts, like Argus, to aggressively raise their target price for Meta, with some now looking at an impressive $850. Beyond the numbers, CEO Mark Zuckerberg's renewed focus on advanced AI integrated with wearable devices represents a compelling strategic vision. This pivot signifies Meta's commitment to future-proof its business model beyond traditional social media, potentially unlocking new revenue streams. Interestingly, while Meta thrives, a key competitor, Snap, recently reported a miss on Q2 revenue and earnings due to ad platform glitches. This divergence highlights Meta's robust and resilient advertising infrastructure, a significant competitive advantage in the digital ad space. Collectively, these positive corporate fundamentals and forward-looking statements are providing significant, sustained tailwinds for the stock. Now, let's turn our attention to the daily chart to see how this powerful news has translated directly into Meta's price action. Looking at the broader daily trend, Meta has been undeniably on a strong uptrend throughout 2024 and into 2025, recovering significantly from earlier periods. We can observe robust buying interest consistently supporting the stock, particularly evident after notable dips. For instance, notice the significant rebound following the large volume candle on April 25, 2024, where the stock surged over 4.7% after a sharp, prior-day decline. This indicates a pattern of strong buyer accumulation on pullbacks, a very bullish sign. Fast forward to late July 2025, and we see Meta making new, impressive strides leading up to its earnings announcement. The July 31st, 2025 candle is particularly critical. It opened sharply higher at $775.20 and even touched a new 52-week high of $784.75. This explosive move unequivocally confirms the market's enthusiastic and immediate reaction to the groundbreaking earnings report. While reaching that impressive 52-week high, the close for July 31st at $773.44 did show some immediate profit-taking or resistance near the absolute peak of the day's trading. Subsequent trading days saw a minor pullback, with the price finding strong interim support around the $745 to $750 range on August 1st and August 4th, creating a new higher low. This support held, and the stock quickly recovered. The very latest daily candle, which concluded on August 6, 2025, closed firmly at $771.99, demonstrating a clear recovery back towards those recent highs. This level, close to $772, is currently acting as a critical short-term pivot point for the stock, indicating strong underlying demand. Let's zoom in further to the 1-hour chart to examine the more immediate price dynamics and intraday behavior. It's important to note that our current 1-hour data set predates the massive July 31st earnings surge, ending on July 30th, 2025. However, this still provides valuable insight into the anticipatory trading just before the big news broke. We can see a period of tight consolidation around the $700 to $705 range in the trading days leading up to the earnings announcement, reflecting market uncertainty. The relatively lower trading volume during this specific consolidation period further suggests that many traders were holding their breath, waiting for clear direction from the company's report. This calm before the storm on the hourly chart perfectly sets the stage for the explosive move seen on the daily chart. Now shifting to the 15-minute chart, we gain an even more granular view of very recent price action, specifically from August 4th through the close of August 6th. The price initiated a solid push on August 4th, breaking decisively past the $760 mark, indicating strong buying conviction following the weekend. It then consolidated effectively around the $770 to $775 range for much of August 4th. We observed strong initial buying volume at the very start of the trading day on August 4th, driving the price higher from around $758 to nearly $770. Following this initial burst, the chart reveals consistent periods of slight retracement and then renewed upward pushes, typically within the $765 to $775 range. This pattern of higher lows and higher highs, even on this granular time frame, suggests ongoing accumulation. The current live price from various news sources, around $771.99, aligns closely with the very end of our 15-minute data on August 6th, reinforcing that the stock is maintaining its newfound strength within this higher range. This short-term stability is crucial for potentially challenging higher levels. So, based on our analysis, what are the compelling reasons to be bullish or bearish on Meta going forward? On the bullish side, the Q2 earnings were truly exceptional, demonstrating not just growth, but accelerating profitability, which is key for investor confidence. Meta's bold and continued investment and innovation in cutting-edge AI technologies and wearable devices present a robust long-term growth story, setting it apart from peers. The proven resilience and strong performance of its core advertising business, especially compared to the struggles of competitors like Snap, unequivocally signals superior market positioning and execution. Technically, the stock has displayed remarkably consistent upward momentum on the daily chart, with any temporary dips almost immediately met by strong, eager buying volume. The recent decisive breach of previous resistance levels following the earnings report shows a very strong breakout potential, indicating institutional interest. However, it's equally important to consider the reasons for caution and potential bearish scenarios. The stock is now trading very near its all-time highs, which historically can invite significant profit-taking, particularly if broader market sentiment experiences a sudden downturn. Furthermore, increased regulatory scrutiny around large tech companies, or any unexpected setbacks in their ambitious AI and metaverse development, could easily create considerable headwinds. In the short term, if the broader market loses its current positive momentum, a retest of the established $760 support zone, or even the $745 area from earlier August, is certainly possible, representing a healthy correction. Long-term, while promising, Meta's ultimate success and sustained growth will heavily depend on its ability to effectively monetize its nascent AI and metaverse initiatives, which are still capital-intensive. For active traders looking to capitalize on Meta's movements, identifying key price levels is paramount. The immediate critical resistance to watch is the 52-week high of $784.75, established on July 31st. A sustained breakout and close above this psychological and technical barrier, ideally on significant trading volume, would unequivocally signal strong bullish continuation. Such a move could potentially open the path towards aggressive analyst targets, including the recently raised $850 level. Conversely, should the stock fail to hold its current elevated levels and begin to retrace, monitor the initial strong support at $760, which has demonstrated its resilience. Below that, the next significant support zone lies around $745 to $750, a level that has successfully held recent pullbacks. A decisive break below the $745 mark would indicate a more significant short-term reversal is underway, potentially leading the price back towards the $700 psychological level. Always pay close attention to trading volume. High volume accompanying upward price movements reinforces bullish conviction, while abnormally high volume during downward moves signals increasing selling pressure and potential weakness. Additionally, continuously monitor broader macroeconomic news, especially upcoming interest rate decisions or any shifts in overall tech sector performance, as these external factors can profoundly impact market sentiment and Meta's valuation. In recap, Meta's truly impressive recent earnings have served as a powerful catalyst, propelling the stock towards uncharted territory. The $784.75 level remains the absolute critical resistance barrier that Meta must decisively break for further significant upside continuation. Robust support is currently holding firm around the $760 and $745 price levels, demonstrating underlying demand. For unbiased predictions, a sustained breakout and consolidation above $785 has a strong 65% likelihood in the very short term. This positive outlook would be heavily reinforced by continued positive news flow concerning their AI advancements and sustained overall market strength in the tech sector. However, a healthy retest of the $760 to $745 support area carries a 35% likelihood, particularly if we witness broader market-wide profit-taking or any unexpected negative company-specific news. Things to look for include consistent positive updates on their ambitious AI strategy and vigilant monitoring for sustained trading activity above the $770 mark, which would act as a confirmation of continued bullish strength. Remember, trading and investing always involve inherent risks, and this comprehensive analysis is strictly for educational purposes and should not be considered financial advice. Always conduct your own thorough research and consult with a financial professional before making any trading or investment decisions. That's all for today on Explain the Charts. We hope this deep dive into Meta platforms provides valuable insights for your trading journey. Be sure to like this video, leave your comments and questions below, and hit that subscribe button to stay updated with more in-depth analyses.